Hi, let's study JASO, starting by technical analysis, where there's not a lot of technical analysis we can do because the IPO was just last February, so we have just this technical data. The stock is closed at an all-time high on Friday at 24.2. We cannot make a 50 days moving average or anything else, but this chart is bullish. Look at the very strong volume here with these two white Marubozus to a new all-time high, so very bullish this chart. Let's check the fundamentals we have. Not a lot either. We have just one share count of 26.7 American depository receipts, and the market cap is $645 million. Well, there's no share count evolution, but from what I've seen, it has remained the same since 2005, even before the IPO. As for long-term debt and the current ratio, long-term debt is 0 and the current ratio is 1.85. I would like to have it above 2, but this balance sheet is healthy, with cash and marketable securities accounting for 27.7% of total current assets, and the inventory is 44.7%. What I don't like to see is receivables very high with more than 50% of current assets. I don't like that situation, but this looks healthy to me for JSO. Okay. Now revenues. For 2006, this is awesome growth here. In 2006 the company had revenues of 89 million, and now expected for 07, this is the company's guidance, so not me, the company, $285 million for 2007. And for 08, well, I just doubled this number, but it could be a lot higher, 570 million, because the company sells everything it can produce. I have a similar stock, it is TSL, and this industry, solar cells, is growing by leaps and bounds. Gross margin in 2006 30.48, it's going down. In 2007 the company is estimating 19.5%, and I say 18% for 2008. They say they're working to stabilize gross margin at current levels, so I believe 18% looks reasonable here. Revenue compound annual growth rate with the base of 2006, and considering this 570 million, that can be more, 152.7%, so really awesome for a company that started operations just in 2006, in April 2006. It's incredible the revenue level they already have. The industry average grew 11.1% since 2005, but this is not really this company's industry. It is specialized semiconductor or something like that. We still can't integrate this on an industry. Perhaps we should mix it with TSL and another one. Let me see here, which one is it? Where is this? TSL and STP could be a better comparison instead of the semiconductor specialized industry. Well, we'll refine these estimates going forward, but price to sales ratio for JASO is 2.26, and for that industry average it is 3.75, but a lot higher for those direct competitors. As for earnings per share and net margin, in 2006 the company earned 0.41 5 cents, 415, how do you say this, 41.5 cents per share in 2006, with a net profit margin of 12.33%. But the company started operations just in almost mid-year, so probably in 2007 earnings will be a lot higher. I'm estimating 1.19 earnings per share, because I did a net profit margin of 11.5%, and those 285 million revenues, and considering 3% dilution, it gives me this number, 1.19 earnings per share, and 408 $2.01, and with the net profit margin declining to 10%. But probably maybe this I'm a bit being too conservative here. It's hard to know because there's not much history for this company. But well, we'll stick to this. Price to earnings ratio using the 2007 estimate is 20.2 for JASO and 27 for the industry average. So let's derive the model. You know, these yellow lines are known facts. This is the initial share price, the close on Friday, 24.2. The initial share count, 26.67 million. As for dilution factor, I consider 3% a year, but we really don't know what will be. I don't like the recent IPO stocks because often they dilute a lot, but we'll stay with this 3%. Final share count, 29.1 million shares. This is considering this 3% a year in 2009. And 9, initial revenue, 2006 revenue of $89.2 million. Revenue compound annual growth rate for the next 3 years, I put here 2.2, which means 120% a year. Well, revenues are growing, let me see, from 89 million to 285 million in just 1 year. That's 220%, and I'm considering 120 for the next 3 years. So I believe I'm not being too optimistic here. Final revenue gives me 950 million. Initial net profit margin, as we've seen in 2006, was 12.33%. Final net profit margin estimate 10%. Final net income estimate, well, this is not really, this is an estimate derived from the others. These orange lines are given automatically by the model. 95 million. Earnings per share for 2009, 3.26, and multiple earnings per share multiple estimate of 27. This could be more, but let's stick with 27, being conservative here. Final estimated share price, $88. Share price compound annual growth rate of 53.8%. So the optimal selling price today would be $56.41. That's the point where, given these estimates, the return would be less than 16%, would start being less than 16%. So this stock looks very attractive. On a 1 to 10 scale, I give it a 9. Thank you. Bye.